Okay, so good morning, everyone. Welcome to the Macro Snapshot. Welcome to the new week. We are Monday, October the 20th, 2025, recording this as always in the morning. Let's just see what's going on. I first of all just want to look at the volatility chart. So I've got here the VIX futures curve. And what we can see here is that the spot and the front sort of VIX futures is actually still a little bit sort of elevated. So we're not completely back into the contango state. And that's at quite an elevated level. We're still trading, over 20, as you can see. And let's just compare this with 1 week ago, just get obviously to see the difference here. And what you can see is that 1 week ago, this was the more typical with the front situation with the front of the curve in contango, much lower, so signaling less stress in the immediate sort of short term. But what we can see is that we've obviously had a VIX which spiked, a couple of days ago up into the mid 20s, but it still remains a little bit sort of elevated. So this is interesting. This is signaling to me at least that the market is not completely giving the all clear. Now, could this be extra sort of put protection people are buying? Could it be some calls people are buying? But the point is that this hasn't come down completely, and that belies the fact that the index, like the S&P 500, for example, is almost at all-time highs and has come back quite a lot. So let's just look at the index and just have a look here. Some of these sort of stock indices, and you can see here that the ES, so this is the ES futures, not a huge amount of energy overnight, but basically after that sort of the Trump shock and then sort of heightened volatility, you can see that we're just sort of pushing up a little bit, and possibly we'll retest the highs or these local highs anyway. I mean, there's a little bit of risk off because after Trump and his tweet, as always, there was a little bit of a taco trade, sort of a mild one. And Trump said over the weekend that 100% tariffs on China were not sustainable. So a relative amount of positivity. We also see this week that there's going to be in-person talks between Besant, the Secretary of the Treasury. He's meeting with the Chinese Vice Premier He Lifeng. They've already been speaking. So there's sort of conciliatory, maybe not necessarily conciliatory, but definitely dialogue. And as long as there's dialogue, there will be a market which is more leaning to the sort of optimistic side, thinking that some kind of a deal on the tariffs will be done. Trump himself was saying that a deal on soybeans would be a good thing, and that's an easy win for Trump and for Xi. It's an easy thing to do. They're apparently meeting in 2 weeks, and Xi can announce that the Chinese will be buying more soybeans. Trump can trumpet that as a big victory, and everyone will be sort of happy. So in general, let's just maybe not optimistic, but a relatively constructive tone between China and the US. If we look at Nasdaq, similar kind of situation here. It did have that sharp sell-off, then a retest, and now is pushing. I don't want to say pushing highs, sort of a sideways consolidation is probably a more accurate way of looking at that. Having said that, let's keep an eye on the smaller caps, the Russell. You can see not as strong not as strong as a recovery. And just to sort of keep an eye on things as well, if we look at the Europeans, let's just see what's going on over there. You see the Europe, similar kind of situation, and also the 500, the Euro Stocks 500, are relatively strong. So the European stocks outperforming the US a little bit. Also in terms of China, pretty important what's going on at the moment for the next few days. The Chinese have a big meeting every few years, and this is the fourth plenum, which is going to discuss the 5-year plan. So China, the Republic's been around for about 75 years. So this is going to be, I think, the 15th 5-year plan. So this is the opportunity for the powers that be, the Chinese Communist Party, to basically give big picture direction to the front of to the future of the economy. And a lot of commentators, there's not a huge there's just a basic readout which we'll get after a few days. We won't get detailed analysis of this until next March. There's normally kind of like a 5 or 6 month gap. But basically, there will be some indications about where the Chinese, at a very, very high level, want their economy to go. There's talk about them trying to push domestic consumption, about becoming more self-reliant on high technology and computer chips. So there's all these kind of things, which in general are relatively supportive, one could argue, for the Chinese economy. And just talking about that, we did get some data overnight. Let's have a look, see if I can dig this up. We had quite a lot of, relatively good data from sort of China. And again, it's interesting because one has to say is that let me just pull this up here. I have to do it manually now. Okay. So if we look at China, I mean, that could also just be because of the political meeting, the plenum. Maybe the data was slightly manipulated, so it looks as though it's positive. But basically, if we look at the data which came out, the LPR, so the interest rates, essentially loan prime rate, were unchanged. That's expected. If we look at the GDP, that came in a little bit better. So you see here 4.8 versus 4.7. If you look at the quarter over quarter, expected at 0.8, came in at 1.1. So, altogether, relatively solid. If you look at retail sales, they came in a little bit better than expected. You also see industrial production came in a little bit than expected. Now, again, there possibly should be an asterisk because we do have the fourth plenum meeting, and the Chinese hate having bad data as they go into a sort of a big symbolic meeting. But nonetheless, a lot of this data is relatively constructive, in theory. And so if we actually look at something like copper, we can see that some of the industrial metals been doing pretty well overnight. So let's have a look at copper before we look at gold. So if we look at the high grade, well, it's come off a little bit, but you can see copper just, did have a little bit of a pop on that Chinese data. It looks as though the last couple of hours it's come off a little bit. If we look again at silver and a gold, you can see that both of these sold off quite vigorously over the last couple of days. Gold already seems to be sort of pushing a little bit higher, but at this point, we all know it's extremely oversold. In terms of silver, interesting, I was doing a bit of research over the weekend, as we probably all were. And basically in silver, it does seem like this short squeeze, the conditions for that are possibly coming to an end. The traditional sort of giving of precious metals holiday, is coming to an end in India. But there was incredible stories of India of, traders over there and bullion dealers, silver dealers, literally running out for the first time in, 50 years out of silver and gold. And there's also sort of, a lot of the silver which had been sort of rushed in from the COMEX vaults in New York to cover the silver shortages, the physical silver shortages in London. They seem to be coming to an end. So the point being here is that some of those constructive factors for the short squeeze in silver may be coming to an end. It's going to be interesting to see if we do get a final push to the top. But I'm expecting here maybe some kind of consolidation, absent geopolitical risk or something. But as always, silver will follow gold. And as you can see here, gold is sort of creeping up again. Interesting one. To be short there, it's probably, a good play. Probably options, obviously, is the best way to do that rather than just a directional move. In terms of other stuff over the weekend, we got a slight surprise out of France. S&P, so Standard and Poor, they did downgrade France from double A minus. It was a double A minus. It was downgraded to A plus, so a little bit of a downgrade. And you can see here, I mean, it's come back a little bit, but you see here the FOATs. You see it gap down at the open here. So the French bonds gap down. Now, if you compare that, let's say, to the Italian bonds, a bit of underperformance. And if you compare it to the German bonds, also a little bit of underperformance. So overall, the French bonds still under pressure, getting sort of downgrades, and any further dislocation in the political process over there will cause more pressure. In terms of other markets, there was a meeting between Trump and Zelensky at the White House on Friday afternoon. Apparently, there was a lot of disagreements there. Trump essentially saying that Ukraine, in order to get the ceasefire, would have to probably, or realistically give up some of its land. Zelensky pushed back. Anyway, so the point is that in terms of the oil market here, you see that oil still underperforming, even though, the Chinese economy seems okay, US economy seems okay. There's just too much oil. There's more and more commentary coming out about excess production and surpluses being produced or existing around the world. So the market is starting to trade heavy. If we look at something like the December contract here, you can see here, I mean, I don't know, I'll try and throw in a couple of moving averages. Let's just bring those up. Let's say our typical moving average, 20, 50, 100, 200. I mean, the moving averages are all pointing downwards. Just very heavy price action. Any rally here is failing after 24 hours or so. And so it could just be not necessarily that oil will collapse, but it may just sort of drift down and test these lows on the December contract of maybe around about $55, or it could just drift around here, sort of sideways, consolidate. And the point is here is that even despite, maybe the tensions achieving a ceasefire in the Ukraine conflict, and also we did unfortunately have some deaths in Gaza over the weekend. Apparently some Hamas fighters attacked Israelis, Israeli counterattacked. But so, will that ceasefire, will it sort of hold? But both on the Israeli side and the Americans also saying that, no, the ceasefire is in place and it will hold. So there does seem a genuine desire there to sort of keep things stable. But yes, there will be some sort of stress and strain. But the thing is not enough. The point I'm trying to make here is that not enough either in the Ukraine or the Gaza situation to give a significant boost to the oil market. In terms of other stuff which are going on, the dollar is a little bit bid, as you can see here, up 19 basis points. Again, this could just be a nice sort of retracement here back to the 20 and the 50-day moving averages here. Could that push higher? Sure. It's probably going to depend a little bit on some of the talks. Maybe, some of the information we get out of China at the fourth plenum meeting. Are they going to boost their economy? Are they going to have an aggressive rhetoric towards the US? But possibly even more important will be, as I said, the continuation of talks between Secretary Treasury Bessent. I believe that's happening midweek, more like Tuesday, Wednesday. He's going to physically meet in person Vice Premier Li Fang. So if that becomes positive, it could be a little bit of a risk-on moment, and we might see some of these other currencies, maybe like the Aussie, sort of pushing a little bit higher. Talking about the Aussie, interesting situation that the Australian Prime Minister Albanese is in Washington today, meeting with Trump. And there's going to be a big push because Australia produces, I think from memory, about 8 to 10% of the rare earths produced in the world. Not nearly as much as China, of course. But on the other hand, in theory, Australia is a long-term ally of the United States. And the idea here is that Albanese, the Australian Prime Minister, will actually be encouraging Trump and pushing for sort of maybe sort of some sort of deals on rare earths, Australian rare earths, in exchange for better terms overall for tariffs and also sort of security arrangements and things like the nuclear submarine program, the AUKUS program and whatnot. But the point is, there could be some interesting headlines coming out of Washington regarding Australia and trade and rare earths today. And if that's positive, we could see a little bit of a sentiment boost for the Aussie, for the Australian dollar as well. So that's something interesting to be looking out for. In terms of some of the other currencies, we have the Canadian dollar, as you can see here, this is on the futures. So really just sort of drifting downwards versus the US dollar. We do get a Canadian CPI tomorrow. If we just have a quick look, let's just have a look and see, what am I looking for here? Share, I'm trying to find, yeah, I just want to look at the BOC, just what is actually priced in at this point. And so let me just bring this up. Let me go in here. So we can see here, just as it comes up. Right. Okay. So looking sort of at the US, just by the way, on the US, we still have over 51 basis points priced in for December. So 2 full cuts, so really fully priced in, and 25 fully priced in for October. So interesting to see if that drifts back a little bit over the next week or so. The Fed is in a blackout range. But just getting back to Canada, you can see here that the next meeting coming up in 9 days for the Bank of Canada. It's an interesting situation here because only a 70% chance of a cut is priced in. So there is chance for more dovishness here. We've got 17 basis points of cuts priced in. The first full cut is not priced in until December. So the point is that we do have tomorrow, as I said, CPI. If CPI comes in on the soft or reasonable side, that could give the green light for the Bank of Canada to feel more comfortable actually confirming this cut at the end of October. And so that pricing of 17 basis points should probably go into the 20s, 20, 21, 22 basis points, which again would be sort of a negative in theory for the Canadian dollar. On the other hand, if the CPI were to come in strong tomorrow morning, that could just bring that back to, let's say, 14, 15 basis points. So a bit more of a coin cost. So that's an interesting one. In terms of other stuff happening this week, we do have some big earnings. We have Netflix coming in tomorrow. We have Tesla on Wednesday, which obviously has a huge market cap, important part, especially of the NASDAQ. So a couple of important sort of earnings. Obviously, at the end of the week, we have the US CPI. Now, that's delayed. That's from the September numbers. So that's, exciting to get a little bit of old news. But having said that, there hasn't been any economic data released for what seems like about 2 to 3 weeks at this point. So the market's going to be very, very focused on that. Obviously, we'll talk about that a little bit later. What's also going to be an interesting one is I just want to sort of see here what happens with the 10-year, because we have the 10-year, hovering around a 10% here. And I'll just look here on the price. Just going to be interesting to see whether this goes either way here, maybe because of CPI. As I say, around about the 4%. Again, this is just on the price, but just trading in a range here. So this is something to see whether equities can, continue to see, these yields up at 4% and whether they're comfortable with those. Okay, guys, I'm going to leave it there for the day or for the morning. So have a great trading day, and we'll continue this again tomorrow. Thanks very much, and goodbye.